Hey folks, if you're looking for high-level professional day trading education as well as professional trade dissection and analysis, you've come to the right place. I'm Pat Mitchell. I've been a professional day trader for the past 11 years. And today I've got a banger of a video. It's going to answer a lot of questions that a lot of people have about my strategy. And I'm going to go into detail. I was presented with a comment from last night's trade dissection and analysis video, and we're going to get right into it. Give me a sec. I'm going to fire up the charts and then we're going to go over it. So sit back, and this is going to answer a lot of questions about the strategy that I use each and every day to pull profits out of the market. So one sec here, folks. Okay, so I've been presented with a question here from Miguel, and it's a great question because I think there's a lot of misconceptions about what I do on the charts and what my strategy is. So Miguel asks, first he says, thank you. You're welcome. Just a question to check if I understood right. Number one, were you buying options contracts, calls, while the price was falling? So to answer the question, yes, there's more to it than that, but the direct answer to that question is yes. Number two, if so, is that what some people call averaging down strategy? Thanks in advance. So yes, you can call this averaging down. I don't necessarily like to call it averaging down. I call it averaging in. And there is a difference, and I will explain on the charts. I'm going to go over a specific trade that I took. I'm going to show you my entries. I'm going to show you what the trade plan was, and I'm just going to explain it for you. So I just wrote back to Miguel that there's far more to it than that, and the easiest way to answer this question is in a video. So this morning, right now, at 4:22 a.m., I'm doing a video in response to Miguel's question because I know there's a lot of misconceptions about the strategy and why I do the things that I do. So let's get into it. I'm going to now share the charts and then my entries as well. So hang tight. Okay, so I'm into the full charts, and now I'm going to pull in my trade entries. So the trade entries is, this is a channel that I have for the chat room, and I post every single entry I take. And you can go back, there's hundreds and hundreds and hundreds and hundreds, if not thousands of trade entries charts. And it's that way it's really easy to go through them and you can always compare. So this is the trade that we are going to be referencing here. Okay, so now what Miguel is referring to is where my cursor is circling, where I enter, and now I'm going to explain. So you can take this as an averaging down strategy. There's more to it than that. At first impressions, when you are when you have a lack of experience day trading, like you don't have much time, because I've been doing this for over a decade, I've been doing this for over 11 years now, there's a certain way that professional traders trade. Remember, I'm not trading with a small account. So that's number one. Number two that needs to be noted is when we are averaging, we're starting into proper technical levels or just before those technical levels. And the reason for that is if you always wait right for this level, okay, so let's say right here, you see how the bottom of that just misses that actual level? It's very easy for it to bounce right there. And the reason for that is you have buyers coming into definitive technical support or resistance, but we'll talk about support because that's what we're doing here. So you're going to have buyers stepping in here, all the way down. And as it approaches this actual level, those buyers become thicker and thicker and thicker and thicker until it hits that happy medium point where the sells become less and then the buyers become more. There's a tipping point where buying pressure comes in. That's the market, right? That's what actually makes up markets. When you find a price point that people are willing to buy more than people are willing to sell. Okay. So you have to remember that. That's really important to entering in early, so to speak, and why we average in, not average down, average in. When you're averaging down, it's because you're in a losing trade and you're trying to correct that average. This is not what I'm doing here. I know at first impressions it can look like that, but it isn't. It's very different. So when we execute these trades coming into that level, we are starting into that level. We're not waiting perfectly for that level. We're averaging into that level. You also have to remember, as I noted when I was going through the points of this, that I'm working with far greater size. So I can't just hit it with X amount of contracts, hundreds of contracts. I can, but my fill will not be the best. Now, that is only partially true, and I'll tell you why, because I want to be real clear with this video. Options are the most liquid vehicle out there. If you actually look at that level 2, there are tens of thousands of contracts at any given moment waiting to be bought and sold. Even if you look at an options chart, right, the actual entry chart on smaller named options, there's so many there. Now, the entries chart may be thin, but there's so much volume there. Options are ridiculously liquid. Now, I can remember years ago, Tim Sykes used to say that that's why he didn't trade options, because options are illiquid. Absolutely not. They are super liquid. Okay. So that's really important. But I'm also not going to throw all of my eggs in one basket on my first entry. I'm going to average into that level. Now, on this trade specifically here, now this first entry is up here. This is different. This is a separate trade. This is a feeler trade. So we're going to take that off the table. Okay, so let me just clean up this chart for a quick sec and now pull this back in. So I want you guys to pay attention to these entries. This first entry right here is coming down into that level. The next two entries are into this level. It's right at that level. As it slips through, as per my strategy, a contingency plan is always this. When you have your level and you start in, add into the level, there is always a potential for these to slip lower. Now, I have a definitive risk strategy. And my risk strategy dictates, and it's more than just a basic bitch, I'll give it a 1 point per share. There's more to it than that. But what I do in volatile markets, which we are in, is we give it 1.5 points per share. And it's interesting because if you look right at this level down to lows is $1.49. It's right into that. Now, I'm not going to stop out because it hits $1.52 or $1.53 or something like that over. It needs to confirm weakness. If this low would have broke, I would have had to have got out because it's basing. Okay. Once it's down this low and it starts basing like this, and if it fails, you got to get out on confirmation. Okay. So to get back into the entries, start here, add into the level. As it slips through on volatile pushes and thrusts down, I am averaging in. You can call it averaging down. I am correcting my average because it's still within my risk parameters. Okay. So when we look at this, if I could zoom in on this, you're going to see an entry right here. And then on confirmation, okay, when it starts confirming, I go bang, bang. Those are my last two entries. That is actually, once it confirms, is where I am actually applying size. These first entries before it confirms is always smaller size. You may see a lot of entries coming down into that level. My first entry on this was only 25 contracts. My secondary, I believe I added 50. Okay. Then once it starts slipping, it's 50, 50. Once it confirms, that's when I apply size because I need to correct that average. Because as part of my contingency plan, I have a plan. I always have a plan. If a trade doesn't work, I have a plan for it prior to entering into that trade. So it comes down into that level. I'm looking for a bounce. If it does not do that, it slips further. I add into the wash, get out fully on the retracement, which is what I did. Now I had more size in it, so I was able to hold all the way up to my target, which was actually just above up in here. So that's how I trade. So to kind of really hammer this home, it's not averaging down. This is how professional traders trade. You're entering into the level. If it breaks that level, that is part of your risk strategy comes involved. You have your entry strategy. If it comes lower, you now need to break out your risk strategy, and you need to work and manage that position of that trade. It's not just about averaging down. I know what you're asking, Miguel. You're not wrong, but it's not 100% correct. Okay. The details matter when it comes to strategy. So I hope that this clears things up for you guys out there. There's far more. Remember what you guys have to remember. Number one, experience can be something that is greatly overlooked when it comes to looking at day trading videos. It's something that's never really in the forefront of people's minds. It's usually in the background. Like, experience is everything, right? When you've done this consistently and wildly successfully for over a decade, there's certain tactics that I'm going to be able to use that if you tried to implement, you would fuck it up. And that's not being an asshole. That's just simply the truth. And I'll give you an example. So Adam, for those of you that watch this channel, Adam is a member and he also works for Trick Trades. He tried something. Now, he tried on a day that was washing, right? That was selling off, buying, and he just paper traded a massive account, $1 million account. And he was throwing all the size in the world at it to try and get back green. He couldn't. And in that trade, well, so many people were red, I was green. It's through management and experience. A lot of people think that they can just correct the trade with size and it'll be all right. That is not the case. Experience comes in. It's one of the reasons why I always say, do not trade outside of your wheelhouse, meaning your skill set. Don't do that. And that's why the Trick Trade Size Up program is so important, because it keeps you in check. It tells you exactly where you should be, and you need to graduate these wheelhouses in order to step up and size up. So that's really important. Experience is everything, folks, and it's very easy to overlook that. And this is also in these videos, you also need to remember these are just free videos. This is just the stuff that I'm willing to give away for free. Remember, this is my strategy. I developed it. I didn't take it from anyone. And for people that have actually developed a strategy and they're in the position that I'm in, they don't want to share it with anyone because they know what they had to do in order to get to there. They literally bled, sweated, and cried to get to where they are. They damn near died to get to where they are because that's what it takes in order to do this. So when I'm sharing stuff with people on YouTube, people are taking that as that's everything I'm doing. That's not the case. To be perfectly honest with you guys, there is a lot of stuff that is left out on my YouTube channel. Now, that's not a bad thing. Okay. Don't think that I'm not giving you the keys to the kingdom, because I am. You're absolutely getting everything you need here on YouTube, but you have to put those puzzle pieces together for yourself. And that's an issue. And that's why I stress the importance of working with a coach. So if you're asking questions on my YouTube channel, that's great. I welcome that. I love when people ask, an actual legitimate question, because I can do videos on it. I can talk to you guys about it and I can clear things up. But what you're also doing is you're trying to work off of a free YouTube channel, right? Where my videos, sure, they're great. There's lots of useful information, but it is all over the place, right? I'm going to release a professional level lesson, and then I'm going to follow it up with a novice lesson. And then there's going to be a beginning lesson, and then 3 professional level lessons. And then there's a masterful lesson in there as well. Do you understand? It's all over the place. And what you're trying to do is put puzzle pieces together free. You're living in a world of scarcity where you don't want to pay $200 or $300 in order to actually gain the proper information and be legitimately coached. See, I think a lot of people think that most or every single trading service out there is the same. What you get, I'm literally talking with members. It's 4:30 in the morning and I'm on the phone with them, chatting back and forth with them, helping them out with issues. That's the level of coaching that you can get at Trick Trades. So it's like, if you had someone that's been doing this for over a decade successfully, and you see that as an expense, that's crazy. It's crazy. It's an investment in your future. So why continuously take losses that are unnecessary, where that money could have been used and far cheaper than your losses in a service where you're going to get that coaching? To me, it doesn't make any sense. See, I looked for that when I first started trading. I joined one service. It was absolutely brutal, and I was gone within a week. It was horrible. It was dog shit. I've talked about this lots on my channel. But when I first started trading, there wasn't a lot. There was your fucking Tim Sykeses, your Cameron Fooses, all that shit. Nothing I'm interested in at all. That's buying the breakouts. That's no proper risk strategy. I know people, they always argue with me in the comments. Guys, you don't know what you don't know. I've spoken with these people personally, and I know what the truth is. And you don't want anything to do with those services because they're not going to help you. They won't. Sure, some people are going to claim success using that, but they're not really using their strategy, or they're just simply doing their own thing. We don't allow that in trick trades. If you're going to join trick trades, you got to do it my way, because I breed successful traders. That's what I do. And I've been doing this for the last 8 years. So no more spinning your wheels. If you really want to get to the bottom of this and solve your problems and work with a high level coach for a deeply discounted price, come to tricktrades.com. Thank you, Miguel, for your question. I really appreciate it. It gave a nice little lesson for you guys. Hopefully that clears things up. Have a good one. Adios.